All right, so BNP Paribas just dropped their Q3 numbers, and behind what looks like just another solid quarter, there's a way bigger story brewing. We're talking about a bold play to create a real European banking powerhouse. So today, let's break down exactly how they're planning to pull that off.
And right from the top, the CEO, Jean-Laurent Bonnafé, is sending a message of pure confidence. I mean, you can just feel it in that quote. But it begs the question, right? What's this big target he's so sure they're going to hit?
Well, here it is. This is the headline number that's backing up all that confidence. The bank is on track to smash a net income target of over 12.2 billion euros this year. I mean, that is a massive, massive figure, and it really sets the stage for everything else we're about to dive into.
Okay, so here's how we're going to break it all down. First, we'll look at the solid quarter and their big goals. Then, we're going to peek inside the growth engine. After that, we get to the really juicy part, the AXAIM deal, which is a total game changer. We'll also touch on the risks and headwinds, and finally, wrap it all up by looking at how they're building a stronger bank.
Okay, first up, a solid quarter and some big goals. Let's dig into the high-level performance that gives the CEO all that confidence we were just talking about. And wow, the key numbers here are pretty impressive. You've got revenues up over 5%, that's 12.6 billion euros. Net income is up more than 6% to 3 billion, just for the quarter. But here's the really crucial part. This isn't just one part of the bank carrying all the weight. Nope. Every single one of their operating divisions grew. That shows some real diversified strength right there.
So to really get a handle on how efficient they're being, we've got to talk about this key piece of banking lingo, the Jaws effect. It actually sounds more complicated than it is. It's a simple but really powerful idea. Just think of an alligator's mouth. You want your income, that's the top jaw, to go up faster than your costs, the bottom jaw. And when that happens, the jaws open wide and your profit margin gets bigger. Simple as that.
And yep, you guessed it, BNP Paribas is delivering on this. Their operating divisions are showing a positive Jaws effect of 2 full percentage points. So what does that mean? It means they aren't just getting bigger, they're growing efficiently. And that is exactly what investors love to see.
Okay, so we know they're growing efficiently thanks to that positive Jaws effect. But where exactly is all this growth coming from? Let's pop the hood and take a look inside the growth engine. And when you break it down, you see a really nice balanced picture. Their huge corporate and institutional banking division, up 4.5%. What about their core commercial and personal banking? Up 3.1%. And even investment and protection services saw solid organic growth of almost 3%. See? It's this diversified model that gives them a ton of resilience and, multiple ways to make money.
All right, now we get to the main event. This is probably the biggest story of the quarter, heck, maybe the whole year for BNP Paribas. We're talking about the massive acquisition of AXA Investment Managers. And trust me, this is a truly transformative deal, not just for the bank, but for the entire European market.
So you might be asking, why is this acquisition such a huge deal? Well, it's not just about getting bigger for the sake of getting bigger. No, this is a calculated, strategic move to completely dominate some key, high-growth areas of finance. I mean, look at this. This deal instantly creates a new leader in Europe. The new combined company, it's going to be #1 in Europe for long-term savings, #1 for alternative assets, and the third largest asset manager on the entire continent. That gives them absolutely incredible scale and serious market power. And just to put that new scale into perspective for you, their total assets under management will now balloon to around 2.4 trillion euros. Let that sink in. Trillion. That is a colossal figure that puts them in a completely different league. But okay, scale is one thing. How does this actually translate to the bottom line? Well, the bank is projecting a whopping 550 million euros in total pre-tax benefits by 2029. And it comes from 2 places. First, 400 million in cost savings, combining platforms, that kind of stuff. And second, another 150 million in new revenue from things like cross-selling and expanding their services.
Now, to really understand the impact here, we've got to look at another one of those key metrics, return on tangible equity, or ROTE, as you'll hear it called. The easiest way to think about it is like a bank's core profitability score. It just shows how good they are at using shareholder money to make more money, to generate profits. And with this one, higher is always, always better.
And here is the plan laid out.
The bank is on a really clear path to lift its ROTE from just under 11% today up to 12% by 2026, and then all the way to 13% by 2028. And get this, the AXIM deal by itself is expected to add over half a percentage point to that goal. It's like a direct booster rocket for their profitability.
But of course, a growth story this big and ambitious doesn't come without risks, right? It's not all smooth sailing. So for this next part, let's take a look at how BNP Paribas is managing the challenges and, the economic headwinds out there.
One of the best ways to see if a bank is being careful is its cost of risk. It's basically the money they have to put aside just in case some loans go bad. At 39 basis points, that's 0.39%, it's right where they want it to be. This tells you they're managing their loan book really carefully and not taking on a bunch of unnecessary risk.
And, in the spirit of being transparent, the bank did acknowledge a specific one-off fraud case that happened this quarter. They made it really clear that this isn't some recurring thing or a sign of bigger problems. It was just an isolated incident they're dealing with.
So how do we know a bank is actually strong enough to handle shocks like that? Well, that's where the CET1 ratio comes in. This is like the ultimate stress test. It's the bank's core financial safety cushion. And just like with a real cushion, the bigger it is, the safer the bank is.
And BNP Paribas' cushion, it's looking very, very strong. At 12.5%, their CET1 ratio is solid. But what's really impressive is that they kept it at this level even after taking the hit from that massive AXA AIM deal. That just goes to show you how good they are at generating capital.
Okay, for our final section, let's tie this all together. We've talked about strong performance, a game-changing acquisition, and smart risk management. So, how do all these pieces fit together to build a stronger bank for the future?
This timeline right here, this really puts their long game into focus. We're looking at tangible book value per share, which is basically a core measure of what a company is truly worth. And you can see it has grown steadily and significantly for over a decade now. I mean, it's climbed from about 52 euros all the way to over 91 euros today. It shows that this quarter's great results aren't a fluke. They're part of a really consistent long-term story of creating value for their shareholders. So this brings us right back to where we started, with this idea of a European powerhouse. When you look at their diversified model, their bold moves to get bigger, like the AXA IM deal, and their laser focus on efficient growth, it really makes you wonder, is this it? Is BNP Paribas creating the blueprint for the future of European banking? A future that finally moves away from all that fragmentation and starts building true champions for the whole continent?